Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. This is the second episode in our special Mid-Year Outlook series. On the first one, which we put out last week, we focused on the bigger picture view of macroeconomy and asset allocation. On this one, we take a deeper dive into our outlook for equities and discuss why earnings growth is set to become important for the next 6 months. Equity market performance so far this year has been primarily driven by the valuation expansion, while earnings contribution has been limited. In 2022, compression of valuation multiples was entirely responsible for the bear market in global equities. However, so far in 2023, valuation multiples expanded as some of the extreme left-tail risks associated with the hard landing of the US economy faded. After their year-to-date move higher, valuations now look to be fully discounting the potential for the US soft landing. Accordingly, there is little upside left in valuations. Looking ahead, earnings growth needs to take over as the primary driver of equity returns. Absent the earnings revival, equity markets may just move sideways with macro forces inducing volatility. However, we do believe that earnings growth is set to improve over the coming months, just in time to contribute positively to the returns. Yet, one should be mindful that earnings-driven equity returns tend to be much slower than valuation-driven ones. Therefore, while we still expect positive returns from equities, it is reasonable to assume that the fast gains that we've seen over the first half of the year are unlikely to be repeated in the second half. Focusing on earnings, at the MSCI All-Country World Index level, we are seeing an improvement in earnings outlook. For instance, the 12-month rolling EPS growth estimate has risen over the past 5 months after falling consistently since mid-2021. As it stands, as per IBES consensus, expectation for earnings growth over the next 12 months is plus 6%. We see upside risks here. Expectations for long-term growth in earnings have stabilized at circa 10% level after falling from the 22% level reached in late 2021. Net profit margins have stabilized too after contracting from the record high levels reached in mid-2022. Earnings revision momentum has certainly improved during the recent months. At the same time, revision breadth, which is a leading indicator for earnings, has turned less negative. Previewing the Q2 2023 earnings season, which has just started, we believe that corporate earnings will deliver results above expectations, triggering earnings upgrades. For the S&P 500, IBES consensus expects the aggregate earnings to have contracted by 8.1% year over year during the second quarter of this year. If the energy sector is excluded, the contraction is expected to be just 2.6% year over year. Revenue growth estimate currently stands at negative 0.9% year over year for the overall index, and it is plus 2.8% year over year when the energy sector is excluded. We think US corporates have done better than market expectations. As such, according to Refinitiv, as of 20th July, of the 77 companies in the S&P 500 index that have reported earnings for Q2 2023, 73% reported above analyst expectations. This compares positively to a long-term average of 66%. In summary, the first half of the year saw valuation expansion that drove equity prices higher. In the second half of the year, we need corporate earnings to take over as the key driver. We think the corporate earnings will not disappoint. However, we acknowledge that earnings-driven equity markets tend to be slower compared to valuation-driven ones. Therefore, we expect lower but positive equity market returns during the second half of 2023. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information regarding the outlook for your equity holdings, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. Please stay tuned for the next episode of our Mid-Year Outlook series. This is Kishore Muktinutalapati signing off.